Hello, savvy investors. Today, we're diving into the intriguing world of smaller cap, overseas real estate investment trusts, and we've got our spotlight on none other than iREIT Global. About 2 weeks ago, I posted a poll on YouTube to ask viewers which small cap, overseas REIT you are most interested in. To my surprise, an overwhelming 64% of respondents chose iREIT Global. Taking second and third spots are others, and Cromwell European REIT. To me, this means that many viewers are interested in iREIT Global. But given how the share price has been languishing over the past year, with 2023 capital returns at about -22%, the investor confidence in iREIT Global may be lacking. So why is this the case? Does iREIT Global deserve more tender loving care from investors? Let's find out in this video. Before we start, Tiger Brokers have good news for you. Use my exclusive link in the description to sign up for a new account, and you may win up to $888 in shares. On top of that, you can get $30 Apple fractional shares, plus $30 Tesla fractional shares, if you deposit 1,500 Singapore dollars after opening your account. So if you are looking to start investing in Singapore, Hong Kong or US shares in 2024, and don't want to pay any commission at all for up to 365 days, sign up with Tiger Brokers today. With that exciting update, let's jump straight into our video. iREIT Global Introduction and Performance. As you may know, iREIT Global invests in office and retail properties in Europe, in Germany, Spain, and France. It has a portfolio of 54 properties, with total valuation of about 1.45 billion Singapore dollars. Most of these are freehold properties. Many dividend investors are interested in iREIT Global, due to its stable and attractive distributions, strong sponsor in City Development Limited or CDL, and diversification opportunity to European properties. However, iREIT Global's share price has been on a downward trend since January 2023, when it was 51 cents. It has been on a decline and dropped about 35%, reaching a 52-week low of 33 cents in November 2023. Since then, it recovered some of its losses but still ended the year down 22% at 40 cents. In addition, its distribution per unit dropped by 24.3% in 1H 2023, compared to 1H 2022, due largely to vacancies and rent-free periods from new tenants. This volatility in performance has raised concerns among some investors, who are wondering if iREIT Global is facing some serious challenges or risks that could affect its future performance and distributions. Key drivers of iREIT Global's performance. Over the past years, I find that there are usually 4 key drivers of REIT's share price performance. So let's go through each in turn and determine the impact on iREIT Global going forward. 1. Interest rate dance of resilience. In the past year, the REIT landscape has seen its fair share of turbulence. Rising interest rates have cast shadows over the results and distributions of many, with notable names like Keppel DC REIT and Suntec REIT feeling the pinch of escalating interest expenses. But here's where iREIT Global does a little dance of its own. Picture this: iREIT Global has fixed a whopping 96.6% of its debt at a comfortable interest rate of 2.0% per annum, and interest coverage ratio at 6.5 times. And if that's not reassuring enough, there's no debt to even think about refinancing until January 2026. It's like having your mortgage rate fixed while everyone else is navigating the unpredictable seas of variable rates. 2. The Revaluation Monster tamed by caution gearing. Now, let's talk gearing. While some REITs are tiptoeing near the regulatory limit of 50%, iREIT Global takes a much more conservative stance with a gearing ratio of 34.4%. Management's mantra? Keep it below 40% at all times. Another example of the management's conservatism and active style, after increasing its gearing from recent purchase of B&M properties, it announced at the end of 2023, a sale of a property in Spain, and the management intends to lower gearing back down. It's akin to driving well within the speed limit, safe and sound. The revaluation saga that has haunted many? Recall many REITs and companies, especially REITs with substantial exposures to overseas properties, were badly affected by declines in valuations in their underlying properties, which in turn caused their gearing ratio to jump. Manulife US REIT, Elite Commercial REIT, and even Capital and Investment, the real estate giant, just to name a few. However, iREIT Global gives it a nonchalant shrug. As of June 2023, the revaluation of its properties saw a mere 2.9% dip compared to December 2022. Why? Well, the German property, a star in its portfolio, got a valuation boost thanks to juicy rental agreements locked in for the next 15 years. It's like your home's value going up because you just secured long-term tenants at higher rents. iREIT Global will likely undertake another revaluation at year-end, which will again be a downward trend. But given that it has already accounted for some of the declines as at June 2023, and it has a conservative gearing ratio to start the race, the impact is likely to be manageable. 3. The unavoidable currency conundrum. All REITs with overseas properties faces a currency risk. I once commented to my friends that this is something unavoidable in investments, especially if we want to achieve diversification. There is no free lunch. You cannot hope to have a portfolio that is well diversified geographically, and yet have no currency risk. Fortunately for iREIT Global, the Euro-Sing dollar rates have gone nowhere for the whole year, despite of short-term some volatility. 4. Minimal fear from the work-from-home monster of office properties. One of the biggest changes COVID brought to everyone is not the coughing or sneezing, but the work-from-home trends. While some countries like Singapore and Hong Kong have successfully required workers to return to the office while retaining some flexibility, other countries like the US are still facing issues in coaxing workers back to the office, with significant impact on office demand and occupancy. European cities are also not spared. But the impact on European office properties are not as severe as the US, with impact on occupancy and average rental rates only endemic. For iREIT Global, which has 80% of its assets in office properties, it even scored a positive 1.0% rental reversion in Q3 2023. So while there is some slowdown, this is not a significant factor. The Dividend Uncles take. Now, let's dive into the Dividend Uncles take. The financial seas can be tumultuous, but iREIT Global seems to have found its sweet spot. Based on the 4 factors examined, iREIT Global did exceptionally well for 3 of them, and is moderately affected by 1 factor. Sweet performance. With a commitment to a conservative financial approach, a resilient and diversified portfolio, and stable distributions, iREIT Global stands tall. The fixed debt structure, cautious gearing, and the ability to weather revaluation challenges make it a compelling choice for long-term investors. In addition, the sponsors own a massive 43% of the REIT, showing commitment and alignment of interest with investors. After this in-depth analysis, the Dividend Uncle now comprehends the heightened investor interest in iREIT Global. Notably, a recent buy upgrade from a broker, spurred by an attractive yield and astute management decisions such as the strategic asset sale, adds weight to the appeal. While I am currently not vested in iREIT Global, my watchful eye is now fixed, and I'm contemplating initiating a modest position in the near future. Conclusion. So, there you have it. iREIT Global not only navigates but rises above the storms that have cast shadows on its peers. A foundation of fixed debt, judicious gearing, and a resilient stance towards revaluation risk sets it apart in the competitive realm of REITs. The potential of this small-cap REIT should not be underestimated. It stands as a beacon of stability and promise in the ever-evolving landscape of real estate investments. Stay tuned as we explore more fascinating insights. If you enjoyed this sneak peek into iREIT Global, don't forget to hit that like button, subscribe for more iREIT dives, and share your thoughts in the comments below. Until next time, happy investing.